Hi traders, Anthony here. Okay, Ethereum USDT. So what I'm going to do in the video is, we'll have a quick look at this, but I'm going to show you how you can take advantage of volatility in the markets on the lower time frame. I'll show you my results here. You can see we started off with a $10,000 account and we're slowly building this one, getting about a 90% win rate, between 80 and 90. Actually, before we get into the charts, let me just show you quickly. This is the Ethereum USDT journey we've been on since yesterday, and some notes about that. So yeah, we've been kind of nurturing this trade. The video now is following up all of this. I'm going to explain this trade, why we took it, where we're at, what we can expect, etc. So if that's of interest, stick around. Let's go to the charts, and I might just close partial, take 12, money in the bank, and this is risk-free. I've got my stop loss better than break even. So let me show you how we take these trades. This is the perfect strategy for a 1 minute chart. Here we go, 1 minute scalping at its best. And I mean, you can have a lot of fun with this. You sit on the chart as long as you want and enjoy the ride pretty much. Here's the thing. We have these triangles. If we see the red triangle preceded by a red triangle, this is a 1 minute chart, guys. There it is up there. We take the trade on the pullback into the mean. So this was my short. Down it went. Take partial profits, set up your stop loss, and that's a winner. Now, we've also got these counter trend trades, this signal fired here as well. So you could be getting involved in the opposite direction. We've got a counter trend signal here as well, so that could be a thing. What I might do is ignore the dots at the moment because I've done a lot of videos on these. Go back, have a look at my scalping playlist, how to grow your account, and you'll see a stack of videos on these. What I want to focus on is the triangles. 1 minute chart, we're going to be scalping using these triangles, and here's how it works. Okay, as I said, red preceded by red, go in on the pullback, and there's your trade. If you see one of these triangles trading into this shaded zone, you don't take it. If you see the breakout, that's a potential, but it needs to be preceded by the same color. It's preceded by red, we don't take it because it's telling us the market's trading sideways. This is our trade here. This is our setup. Let me just clear everything and make sure I've got my trend bars activated here. I want the bar colors. Okay, don't take these trades because they don't have the same color behind them. This one is the trade you take. You can see that it's preceded by the same color. See how it's trading out from this shaded zone? We're breaking out of the cloud. That's the trade you take. I mean, we do have these red dots. There's a pretty nice short from this signal. There's a nice short from this signal, but let's just focus on the oh gosh, okay. They're everywhere. Let's just focus on the triangles. Let's see how successful is this if we take these trades. 1 minute time frame, Ethereum USDT. This is not a trade, it's breaking into the cloud. That's not a trade, it's preceded by green. We don't touch it. This is trading into the cloud or the shaded zone, don't touch it. That's a nice one. That's a nice one. It's not about the dots. Okay, there's plenty of videos on the dot. This is your trade. That was a bit of a runaway and it can be a bit of a challenge, but you've got the setup here. Red preceded by red. Where do you get in? Look, you know, I will take the risk, and if I see the market starting to consolidate and range, I will go in. Although I really prefer the pullback into the mean here. But there's your short, and I mean, look, if that was your entry and your stop loss is up here, that continued down. So 3 out of 3, I think it is. I think you're going to find that we're going to get a very, very high win rate out of this. That's no trade, although it would have been pretty good because it's preceded by that. We'll do a couple more. That, well, I mean, look, they're good signals, but I don't take it because it's not ticking the box that I want. Same with this, same with that. Okay, that's your trade. There's your signal. There's the pullback. Well, that would have been depending on your stop loss. I like to put my stop loss below these dots, so that could have been your outcome there. Where we have these two consecutive signals like this, it's a higher probability. I mean, you could try the others, but you just take more risk that way. There's your trade here, the pullback into the mean, and there's your short. It just keeps going back, right? There's your trade. Check this out. That's your trade. See how early it gets you into these trends? Let's just scrunch this up and see what we got out of this. Just look at that. Seriously, if this range here is worth $100 on your account, what is that worth? So this is why I'm leaving my position open at the moment. So let's just go back here. This is why I'm leaving this position open. I mean, I've already taken money off the table. I'm well and truly ahead. I've made money. This is risk-free. I mean, how far can this trade? Let's just go and have a look at that. Say on the 15. Who knows? It could take my stop loss out and I've already made money, but let me just clear all this. Thin leg. The market will look to trade through thin liquidity, looking for liquidity. Whereas liquidity, it's stacked under here with these stop losses, but that's your next level of liquidity down here. So, you know, is it seeking liquidity down this far? Or is it going to kind of come back this far? Good question. Seriously, the market needs liquidity, and this is where, you know, like if you have a bit of an understanding of what's driving the markets, let's just go out and have a look at it on the maybe the hourly here. All right, we had this push from this level here. Here's a concept for you. You know, the market, as I said, seeks liquidity, and if you look at my previous video I did on Bitcoin, I was talking about how market makers manipulate this, they push the market back down into, like if we pull a line through here, they're going to force the market up, and retail is piling in. Look at the liquidity in here. This is stop loss liquidity. If you've got however millions of dollars of worth of funds to move, you can't just jump in here and decide to buy. You know, I'm gonna, you know, go in with a few million here and off we trot. You have to work the markets. So they do this. They push it up. They engineer liquidity, and then the market pulls down into it. This is a classic chart pattern here, and you don't hear about it in the, you know, in retail trading courses. We're talking institutional, or we're talking market makers here. It dips down in here, and they're working the market. They're loading up. They're building their positions. They're engineering liquidity. Look what they do here. They push it up, and then what? Look where it dips, and then, you know, you get three big dips. 1, 2, 3. This one goes right down. It trades way down here. Takes out all this resting liquidity, and then it moves. They're going to take profit in a big way, so is this going to drive back down to here? This could even kind of continue on, you know, that could do that. But where you have the market kind of make these big moves like this, liquidity starts to run a bit thin, and the big guys need to move the market back down into these zones, into these levels to load up again. You know, I'm willing to leave this in actually and pull my TP down to here. See if we can get a bit more out of it. See where this is traded at the moment. There's no liquidity here. It's thin. I mean, we do have a build-up of stop losses down here, but this is the next port of call. Let's go down to a 15. One of my members was asking me, you know, how do we know where to set our targets? The first target is always going to be early, and we look to take 70% if we can. Then just look left. Basically look left and see where you see the market ranging. Okay, so we've got this little consolidation zone, so you could just pull a thing through there. Coming down, we can see a little bit of consolidation here above here. So this is the next port of call, basically through here. Just have a look at the chart and you'll see this either pulls up and takes you out and you're well and truly ahead, or you could set your next target, say at the top of this range here, this range high. That could be another partial profit. Okay, so you close more of your trade here and you still leave some in, and then the next port of call is going to be the top of this range here. The other thing to consider when you're looking for targets is, I mean, this is a 15-minute chart. If we go out to a higher time frame, let's just go to the 4 hour. consider this. Think about liquidity. Where is there liquidity in the market? See this value down here? We've got 76.56 here. This is the average true range on the 4-hour chart. 76.56. So if we go to our ruler, where do we enter? We're short about here. Where is 75 point whatever it is? 75.56, 74, 75, right. See where I've got my TP? That was actually kind of well judged. But you can see here how the average true range works. So this is 1 times the average true range about here. The average true range, we can expect the volatility to match that pretty much. It's one of the best indicators you can have on your chart is the ATR indicator. Well, we've got that built into our indicators. We're at 1 ATR down here. So the other thing you do is you grab a Fibonacci and you can go from wherever this move originated here. You could go back here. See the yellow zone in the on my fibs? TP is between the 61.8 and the 78.6. If you wanted to, you could move it up to around the 61.8 or thereabouts. That's not a bad level to go for if you wanted to just set and forget that. The 61.8, so we're under the ATR, average true range. See the little red dots on our indicators here? They're levels. They're really important levels. They work. If you see a confluence of the 61.8 fib level and some red dots and what have you, go for it. That's definitely absolutely valid. So can this thing just hang here and rotate and trade north? Yeah, absolutely it can. Have a look left. See these candle close, candle open here, candle bodies? Well, we're trading right down into this level now. If we pull that through, that's support, and it's breaking through this candle wick. This whole level here is a level of support. But look on the lower time frame, and you'll see that we're ranging here on the 1, 3 minute, 1 minute charts. Anyway, cut a long story short, given that I've closed around about 250 bucks already, and this is risk-free, I'm happy for this stop loss to get hit, and I'll leave that there to see if we get a little bit more out of it. That's pretty much it, really. So, scalping a 1 minute chart? Absolutely. I'll wind up the video with, this is the alert you want, where we see the same color preceded by the same color. Go in on the first pullback into the mean, and there's your short. Right, that's your trade. Guys, if you want to see some results like this, build your account, jump on board with me. Head over to my website, tradingwithanthony.com, and you'll see here on the pricing page, snap it up, give it 7 days, see how you go. You might be surprised at how this could be an absolute game changer for you. It's ridiculously priced at the moment. Take the opportunity while it's there. So with that, I look forward to seeing you in our Telegram. Hope you have a great day. Safe trading. See you in the next video.